It is expected that the European Central Bank will keep interest rates at current levels, but may cut economic forecasts for 2013. U.S. stock index futures were little changed as investors awaited weekly jobless data. I'm Lindsey Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with theStreet, and together we bring you the Morning Call Express. Scott, it's been an interesting week so far. We started off Monday and Tuesday, stocks were down. Yesterday was a mixed day. Today it looks like we're going to open up flat. How do you set up a trading plan in this type of environment?
Well, what you have to do is you have to pick your spots wisely. And although we started the week down, it was because we were very overbought. You know, we started the week, the oscillator was up like plus 60. You had a big move from just say 1343 all the way up to the 50-day moving average around 1419. So some digestion, sideways action was expected. But, you know, it's been a very choppy environment of a lot of haves and have-nots. So your stock selection has been really key if you wanted to have some more gains as we, close out this year.
We should take a look at the S&P chart exactly, see where it's been, where's the 200-day, what are the key levels you're watching?
So if we go to that chart, you'll see the roadmap, and the roadmap's right here. This was that reversal that we saw. This was a nice reversal, outside day, red dog type trade here. After we broke this trend, we had about 9% to the downside. So this was a day that you could have switched some gears, and from there we had a nice rally all the way up to the 50-day, like we spoke about before, 1419. A lot of digestion or a lot of congestion, so to speak, right here to deal with. So we've been going sideways. We're above the 200-day moving average for about 8 to 9 sessions, so it is showing some constructive action. Recently, support's been around 1398, so you should write that down. And the more work we do above this 1398, 1400, the higher the probability we could finally close above the 50-day at 1419. But again, it's a bit tricky right around here.
Now, while the market was mixed yesterday, we saw some conviction in the financial stocks. That was due to an announcement by Citi that they were going to cut costs by cutting 11,000 jobs and closing some branches. That stock popped, but we also saw a nice rally in Bank of America that was up over $10, which was a nice move.
Well, Citigroup, I think the news came out around 9 o'clock. I was on the floor in Bloomberg, and what does this mean? 11,000 jobs cut, $1 billion write-off. And I was like, you know what, the stock will tell us. Everyone thought it would fall apart, but it actually rallied on that news. And it's unfortunate that all those jobs are lost, but it doesn't mean the stock goes down. So if you look at the chart here, this ignited a move above this descending trend line. So that was a nice move for Citi. You know that we've been targeting Bank of America, on a lot of different time frames. Yesterday, it was a nice momentum trade above the 10, closed at 1046. We've talked about it on the weekly chart. Just breaking out. I do think next year 12 to 14 like we've said. So you had some nice action there. You go to potential trades. I'm kind of watching JP Morgan. Doesn't look as set up, but if you look on this little intermediate area here above 4150, maybe it joins that rally. And Wells Fargo also, you would think this quality name would be at highs like Bank of America right now, but it's at a lower level, so not as set up, but above this 33, it could continue in motion as well.
We also got a good rally yesterday out of some of the industrial stocks because China's new regime came out and talked about their economic growth plans. But we'll get into that in the long form version. I want to take a look at Apple because there was a huge move down in that stock yesterday. What is going on here?
We were expecting some type of pullback once we failed at the 200-day around 594-ish, but no one was expecting the action that we saw yesterday. I don't think. Even the bears who were short were like, wow, this is a little bit crazy here. You look at the chart of Apple and you will see that overall you had this head and shoulders top a while back around 700, and from 700, no one even thought it was going to get all the way down to here to 505, but from this area, we had that nice rally back to resistance, back to the death cross, which is right here, and then you expected a day or two pullback, maybe you hold higher to continue, but no, pow. A lot of different reasons. People say it was because China Mobile. People were saying because their senior vice president sold some stock. Some people saying because margin requirements are being lifted from 50 to 60. But all in all, it was very dangerous. So here we are. You have a gap open still from November 19th. It gets filled down to 530. I'm flat this, and I'll look for a trade. 538.77 is your pivot. It's down $1 or $2. If it can go positive, maybe it tries to retrace some of this move. But at this point, I think you have to keep your expectations low. A lot of people are talking about it, you can't just close your eyes and own Apple anymore. And at this particular point, it's become a bit more dangerous and hard to deal with. So just know your risk parameters. I wouldn't say it's game over, but you have to be a lot more strategic. And as far as a trade, I'm going to just let the price action show me, and I'm going to try and be flexible. And today, I don't think it's a time to short or press shorts. It might be a time for a bit of a bounce trade, and then we'll have to measure it from there.
We're going to get into all of this and a lot more in the long form version, so be sure to check that out.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.